Ever dream about investing in properties with only £50 and no mortgage? You're in the right place. Even better, have you thought about investing in warehouses, offices, clinics, pharmacies, you name it? Yeah, do you need millions and millions of pounds to invest in them? No, you don't. Hear me out. I'm Vivian, and I love talking about properties and money and how to make both work for you. And today I'm going to talk about REITs. What are they? How do they make money? How can you invest in them? And are they better than buy to let? And by the end of this video, you will know exactly how to invest in REIT with only £50. I want to caveat this is not an investment advice. It's not an advice to buy or sell anything. Please do your own due diligence, as we say in the financial world, DYODD. So let's start. REIT is Real Estate Investment Trust. Basically, it is a trust that holds a portfolio of real estate asset. And the real estate asset can be anything from warehouses to clinics that you go to in an NHS property, for example, or pharmacies, or even supermarkets, or even elderly care. When you visit your grandma in a nursing home, that real estate could potentially be owned by a real estate investment trust. What these companies do is they pull together a whole portfolio of real estate, park them under a company, and as you can imagine, all of these different properties will receive rental income on a month-to-month basis. And this is what a real estate investment trust do. When you buy a real estate investment trust, you are legally entitled to a share of the monthly rental profit that this company gets. Effectively, you are buying a small silver of all of this real estate portfolio by investing in the real estate investment trust. In the UK, some of the real estate investment trusts will be names such as Tritax Big Box, which holds warehouses, Primary Health Properties, and they own a portfolio of NHS clinics, and NHS is their biggest client, and they collect monthly rental income from NHS by renting clinic spaces to NHS. Or you also have real estate investment trusts that hold supermarkets such as Sainsbury's and Lidl's. And you could buy shares of this company through a stock trading brokers such as Trading 212, Interactive Investors, IG, Hargreaves Lansdown, you name it. This is not a recommendation for any of these stock trading companies. I am not paid by them. I personally use Interactive Investors and IG, and I find them reasonably good to use, but there's always pros and cons with any stock trading broker. So do your own research. And if you would like me to do my own review about which stock trading platform that I like and the pros and cons of each, leave a comment below and I might do a video that covers that. So the pro of investing in REIT. The biggest pro, in my opinion, is the low entry barrier. You can start investing in REIT with only £50 or even less. But if it's anything less, then the transaction cost starts to get really expensive as a fraction of the money that you invest. So even if you might want to buy a buy-to-let property a few years down the track, while you're saving the money up for your buy-to-let property, parking your money in a real estate investment trust can be a very good way of compounding your return so that you reach your deposit target a lot sooner. The second pro about real estate investment trust is you don't have to deal with tenants yourself. Being called out by tenants to fix a broken toilet at 3 a.m. in the morning is no fun for anyone. The tenants of a real estate investment trust are generally large corporations or government bodies like the NHS. Typically, companies who rent from REITs are companies like Sainsbury's, Aldi, Waitrose, and warehouses such as Amazon. These tenants are professionally managed by the real estate investment trust, which means you can sleep really well at night, not having to worry about receiving a call from your tenants. The third pro about real estate investment trust is diversification. Let's say you have £20,000 to invest in a buy-to-let property. Basically, all your £20,000 is hinged on that one single property. And if that one single property doesn't work out, it can be really stressful. Whereas if you were to invest that £20,000 in a portfolio of real estate investment trust, you can diversify that £20,000 into a healthcare real estate investment trust, supermarket real estate investment trust, warehouses, student accommodation, you'll name it. It spreads the risk out, which means it buffers the up and down of your asset price fluctuating. The fourth pro about real estate investment trust is liquidity. Liquidity just means how fast you can have access to the cash when you need to. Let's go back to the example of you investing £20,000 in a buy-to-let property. Let's just say an emergency hit and you need access to the £20,000 immediately. You're not going to be able to sell your buy-to-let property on such short notice. The quickest transaction would be easily 2 to 3 months, even if you are dealing with a cash buyer. Whereas with a real estate investment trust, you can just press a button. As long as the UK stock market is open, you can liquidate all your shares within minutes and have access to the cash within 24 hours if the UK market is opened. And that creates a lot of security if you might be in circumstances where you need that cash quite quickly. The last pro about real estate investment trusts is actually my favorite. I understand that a lot of people love investing in real estate because it's something concrete. You can see the property, you can smell it, touch it, lick the wall if you want to. But we live in a world that is increasingly securitized. By securitization, I just mean when you have an asset, it can be a property, an office building, or a share of a company. When you securitize it, it just means you park that under a legal structure and then you cut that legal structure into pieces and then you sell the small pieces of that legal structure. So legally, you are buying rights to the properties. It can be a company or a property or a portfolio of warehouse in the form of REIT. We live in a world where securitization is the way to make more money. And you can see it from examples such as cryptocurrency. Cryptocurrency is a form of securitization. The quicker you understand the mechanism and the relationship between securitization and the underlying asset, the more sophisticated you become in your knowledge of the financial world. And REIT is a very good basis to start with because it's quite easy for your brain to understand, oh, I'm buying a portfolio of real estate. Once you learn and get comfortable with securitization, it's a lot easier for your brain to start learning about investing in other assets such as Google or Meta or any of the profit-making companies in the UK, for example, Rolls-Royce or Barclays Bank. Again, this is not a buy or sell recommendation. I'm just illustrating one learning path that you could use to speed up your learning process in understanding personal finance and investment. So that's the pros. And it sounded like all rainbow and unicorns and stuff, right? But that's not always the case. There are always risks with REITs. The biggest con is the real estate investment trust price can fluctuate drastically. When you look at the chart between 2022 to 2025, a lot of real estate investment trusts has dropped by at least 30 to 40%, at least. Whereas with a buy-to-let property, you will almost never see the price drop by 30 to 40%. The other big con about real estate investment trusts is you can't leverage. When you buy a buy-to-let property, you generally borrow about 70% of the property price from a mortgage lender, and any gains that you make out of the property is magnified because you're only putting down 30% deposit. So let's say the buy-to-let property price increased by 10% and you only put down 30% deposit, your gain is 30% on the 30% that you have put down as deposit. So you turbocharge your return. But leverage is a double-edged sword. If the property's price dropped by 10%, it also means you lose 30% of whatever deposit you have put down for the property. You really have to catch the market right when you're using leverage. With real estate investment trusts, there is no such leverage. And this can be a pros or a con. It really depends on what side of the market cycle that you manage to catch. The last con of real estate investment trust is income is not guaranteed. But this is the same con with a buy-to-let property anyway. If your tenant decides not to pay, you don't get an income. The risk, in my opinion, is actually less with real estate investment trusts, but nevertheless, it is a risk. It is possible that some real estate investment trusts might go through certain circumstances where for that particular year, they have to reduce the dividend payout because their rental income has dropped. It is possible, but it's the same likelihood with a buy-to-let property anyway. So when you compare the pros and the cons, real estate investment trust has a lot of advantages, especially when you don't have the amount of deposit that's required to buy a buy-to-let property. The next question is, which one is better? Well, it really depends on your circumstances. If you're just starting out on your investment journey and you have not have the amount of money required for a buy-to-let property, saving money while investing in real estate investment trust could get you to the deposit target much quicker. And also, if you're tired of managing tenants, real estate investment trust is a fantastic way of investing because you don't have to worry about tenants at all. Somebody else is managing it professionally for you while you sleep 24/7, 365 days a year. And if you're somebody who's looking at diversification, you don't want to just put all your eggs in one basket, real estate investment trust could be a very good way of investing. Because, for example, if you have £20,000 to invest, you could either buy one buy-to-let property outside of London, or you can split them into 3 or 4 different REITs and invest in each of them, let's say £5,000 each. You can buy REITs in supermarket, warehouses, clinics, and even student accommodation so that you spread your risk across the different asset class. If you're thinking of investing in properties, be it buy-to-let or REIT, I offer one-to-one consultancy to help you map out what is a longer-term strategy to look at how you can meet your financial goals that you have set for yourself. I want to caveat, I'm not a trained financial advisor. I just love talking about investing in properties with people. The link is below, and I look forward to speaking with you about your investment journey and how we can help you get to your financial goal quicker. In conclusion, REIT may not be as flashy as buying a fixer-upper somewhere outside of London so that you can fix it up and you can put it out on Instagram and show off your interior design skill. REIT is still a very good investment vehicle for all the reasons that I've just outlined. So I would say do not discount REIT as an investment tool. And what I love about REIT in particular, especially when you have been quite fixated in investing in property, is it will force you to learn things such as how do you read financial statement? How do you calculate yield? And if you invest in REIT using an ISA or SIP wrapper, all of the income and capital gain is tax-free. This means you can compound your money in the most tax-efficient way. If you find this video useful, give it a like and a subscribe, and I would love to hear your comment below whether you are Team REIT or Team BTL. See you again soon.